We've got Narendra Solanki from Anand, Rathi Shares and Stockbrokers joining in on the show. Also, we have Pranav, Halda, MD at Prime Database Group on the show right now. Narendra, Pranav, hi, morning both of you. Narendra, if I could start off with you, strong, large main board IPOs. You've got Tada Capital, LG Electronics. They are expected to hit the bourses in October. Will we see some impact on the liquidity in the markets, which already seems like it's playing out? FPI is maybe pulling out from secondary market, but all that money is moving to the primary markets instead.
Yeah, good morning. Definitely, the IPO market, primary market has been really showing very good signs after initial lull period in the first half, where we have seen almost around 20 to 21 kind of IPOs, which in this week itself we have seen almost about 20 IPOs hitting the line. So second half is really very optimistic from that line. Yeah, there may be from liquidity point of view, there may be some impact due to large fundraising. Also, you have to keep in mind that festive season is also on the run. So a lot of people would also be spending and buying some goods out there. So there might be some impact, but I don't see that it would be so much that the market would be feeling threatened about it, because we have a lot of liquidity coming out in terms of SIP flows. So not only from retail point of view, but also from institutional point of view, the liquidity has been stable, and we are continuously seeing a good amount of ample liquidity coming out in the markets gradually. So there might be some impact, but it may not be a threatening for the markets right now.
All right, but Pranav, let me come to you now. A very good morning, first of all, and wanted to have your take on SEBI's recently floated consultation paper. That's for easing the minimum public shareholding norm. If you can help us understand which large IPOs are expected to benefit from this, if at all any.
Good morning, and thank you for having me. Just one additional point which I would like to add to what my co-panelists just said. I think for a long time it's been stated that primary market sucks out the liquidity from the secondary market. But I've been consistently saying that the data shows otherwise, and there's no better proof than the last 5 years, which is post-COVID, when you had a significant run in the secondary market, and also you've seen record issuances in the primary market, which has shown that both primary market and secondary market can run in parallel. I firmly believe that as long as there is good quality paper which is available at attractive valuations, it will find its own demand, whether it's from foreign investors or from domestic investors. So that was my point about the initial question that you had. Now coming to the SEBI consultation paper, yes, look, I think I shared it in my previous appearance on your show, that it's going to have a limited impact. Even if we look at the current secondary market, there would probably be about 10 odd companies which would meet the market cap threshold, which has been provided some easing as per these revised regulations. Even going forward, if I look at the pipeline, there are very few such large issues. Of course, Geo is one, NST is another one. But it would have a very limited impact because we're not seeing too many such large IPOs coming to the market. Yeah.
Right. Fair. I get that point. But, Narendra, I want to talk about the FII flows, which, kind of have been muted when it comes to the secondary markets. We all know that. But the good participation is coming in the primary markets. Do you think that this trend will continue? I know you did clarify your stance on this earlier, but do you think the subscription figures, I mean, if you look at any of the IPOs that have come by in the last month and a half, the subscription numbers are quite staggering, pretty much in all categories. Do you sense that will stay?
Yeah, definitely. See, whenever we see FI investment, so we have to categorize into two portions. One is long term and one is short term. So obviously there would be volatility for the short term flows because they have a different investment thesis in terms of how they look at global macro situation, and there are a lot of variables in play with respect to short-term flows, including interest rates, rate scenarios, and commodities as well. So that may be a volatile money. But if you see a longer-term data wherein the FDIs and long-term FIs are concerned, I think they have been largely positive on the Indian growth story. And since India continuously remains a good growing economy in the current volatile scenario, I think there's no doubt that long-term FI investment would continue to remain in India as far as growth is concerned. However, because of current global uncertainty, there may be some patches wherein we may see some kind of a pause or something like that. But I think overall view should remain positive for the India as far as medium to long-term view is concerned.
All right, but Pranav, many large tech IPOs are also coming with their IPOs in the next 12 to 18 months itself. They are expected at a higher valuation. What's your view on this? What strategy should be there?
Well, I have a slightly different view on valuation. I feel that as long as any issue is subscribed even a single time, it shows that there was enough demand for that particular issue at that particular price. We keep on doing this analysis, which I keep on reading about, which is 1 week later or a month later or 3 months later or 6 months post IPO, and then doing an analysis on the issue price. But, I believe that after an issue gets listed, it becomes like any other secondary market company, the 2,500 companies which are, listed on the stock exchanges. And the share price of such companies will move up and down on the basis of the company's performance, how the sector is doing, how macroeconomics are doing. So we cannot, at the same time, we also have this unfair expectation for some reason that not only should all IPOs give a positive return on listing, but also to continue to trade in positive until perpetuity. I think we need to be very clear that this is an equity product, and of course, there will be some issues which will, and we've seen this in the past as well. And there are two examples which I always quote. Several years back, DMart issue had come out, and again there was a lot of hue and cry in terms of the valuation, very expensive. And look where the stock has gone in the last 7-8 years. There was an issue of IRCTC, which was hugely oversubscribed, and there were concerns that it was very underpriced. The government sold it very cheaply. So we also need to keep this in perspective. And valuation is ultimately an art; it's not a science. If all buyers and sellers met eye to eye on the valuation, we would not have a stock market. So I think, coming back to your original point, I think it's both in the interest of the issuers and also the bankers who are advising them to price the issue in such a manner that it gets at least a single time demand. Beyond that, you've seen several cases, including the urban company IPO recently, which got oversubscribed. That can be. But no issuer wants the issue to fail. And you've also seen, one additional point which I'll finally like to make is that you've seen, including in 2023 and 2024, several companies which did not launch their IPO despite getting the SEBI approval because they did not get the valuation that they were looking for. So you've seen this, that several companies will actually let their approval lapse rather than launching their IPO at a valuation which they expect, and they are not getting from the market.
All right, that's the take on the valuation front. But Narendra, are the recent issues expensively priced largely? Any take there? Because should an investor wait it out or participate more is the question that everybody has in their mind.
In recent issue, one thing you have to note it down that if you look at from a historical perspective, then you can definitely arrive at a conclusion that they are expensively priced. But having said that, if you see most of these issues, the kind of sectors these companies are operating are broadly underrepresented in the listed space, and they are coming from sectors which are tier 2, tier 3 kind of a sectors which are important for the economies overall. And if you look the respective size in terms of the sector that are very small or very moderate. So there's a lot of opportunity from shifting of unorganized to organized, and then the growth runway is very large, the base is very small. So you have a 5 to 7 years years of high growth period. So when you see that into perspective, take that into perspective, I don't think that valuations would be that much pricing for all these companies if you have a medium to long term horizon for your investments.
Right. Okay. Narendra, Pranav, both of you, thank you so much for joining in with that perspective today on the IPO market.